When it comes to a stock market crash, you can really look at this one of two ways. One, the market is going down. It is time to liquidate. It is time to sell everything. Two, it is a very, very big buying opportunity, which is exactly what we're going to be looking at today. Now, looking at the stock market pullback, there are 5 stocks that are down 27% or more that I would buy right now. So looking at this article over on the Money Fool, the stock market has been super volatile when it comes to the trade, when it comes to the tariff. Well, a lot of the indexes fell over 10%, which could be considered a pullback. We have seen the S&P 500 down 18%. Today, it came back a little bit in the morning, but ultimately ended just about flat. And even looking at the NASDAQ being down 23%, there are a lot of stocks that have pulled back. Now, we don't know exactly what the future is going to hold, how long these tariffs, and tonight at midnight, the tariffs in China are going into effect. So we have to see exactly what that looks. But when you start looking at these rock solid companies, especially when it comes to the tech side, there are a lot of things that are very big and a very deep discount. If you're getting 20, 30, 40% off some of these companies, when there is a rebound, and there always has been a rebound ever since the stock market has come of age, we will see the stocks pull up. Now, thinking of the first one, it is going to be Amazon. Now, Amazon is down nearly 30% from its 2025 peak, which for a few reasons is because number one, a majority of the products sold on the marketplace are imported, which would have a huge impact with the tariffs that go into place. On Amazon Web Services side of the business, really the economic turbulence could cause the company to put more and put brakes on the cloud and the artificial intelligence and everything else, just with the uncertainty of what the revenue stream is going to look like when it comes to the buying. Now, when we start thinking about Amazon, it is absolutely fantastic. Lots of room to grow, lots on the e-commerce side, and the retail sales up 15%. Cloud computing is going to roughly quadruple in size by 2032. Think about that. So if you're talking, it is going to quadruple in size by 2032. It is going to be huge for Amazon. Impressive margin expansion. We've seen it to continue, even localized business. They did build a Amazon shipping facility just close to where we're at. So very cool to see, and definitely one to keep an eye on. Now, the second one, and one of my favorites, is looking at Alphabet or Google. We know that Alphabet runs YouTube. And if you like the content that I'm putting down here, we are absolutely covering financial news and everything within this channel. So definitely subscribe if you like what we're creating out here. So after falling 29% from the peak, it looks even like a really good buy. So if you think about something like Apple, or in looking at Alphabet, thinking of Google, looking at all these major big tech companies that have pulled back because they still dominate where they're at. And the business has a massive growth when we start looking at Alphabet, cloud computing, as well as looking at Amazon, looking Microsoft Azure, one of the big 3 cloud infrastructures they possess. And they also have the biggest search engines in the world. Now, it is very profitable and massively profitable. 29% net margin on almost 96 billion in cash and equivalents on the balance sheet. That's than 17 times the forward earnings, 14% year-over-year revenue growth. There is an excellent opportunity for this company, which is the reason why personally I do love this one. Now, number 3, we get into Ally Financial. Now, when it comes to tariffs, when it comes to banks that focus on auto lending, consumer deposits, and trading at 27% below its 52-week high. So again, I'm seeing a very, very big difference. Most economics agree that the chance of a U.S. recession has went to 60% according to JP Morgan Chase, which means it could be weaker loan demand, could be higher default as customers and consumers are struggling to keep up with those monthly bills. However, it is still a very highly profitable business when you look at the financial sector. It is one of the largest indirect auto lenders in the United States. So a lot of people that do finance their auto loans end up going through Ally with the dealer relations. And of course, they are very efficient in maximizing the core auto loan lending throughout the entire United States. Bank loans are generally on higher quality loans, which are going to give you a lot less turnover, also a lot less margin in there, but delinquencies have ticked up. And that is in general that we've seen over the last 2 years, but it's not to the point where people are defaulting on a massive amount of auto loans because A majority of people like you and I still need to get to work on a daily basis. Having an auto loan or driving a vehicle is the primary mode of transportation. Number 4, we look at Shopify. This is been and really one of the hardest hit e-commerce business in the market. It is down 41%. Thinking of Shopify, thinking of the tariffs that could be in place, very similar to what we see with Amazon. 41% down from its 52-week high, could have a second chance at a winning business. Now, Shopify's business entered 2025 with momentum. It was up 26% year over year for growth over 2024 and $2 billion in net income, so doing pretty well. And they're expecting it to grow 20 to 30% this year, mid 20s to high 20s range this year when it comes to those year over year net profits. So Shopify is absolutely exploding despite the stock being down 40%. And the final one in here, AMD, Advanced Micro Devices, better known as AMD, latest addition to the personal portfolio, putting it into and really looking at the downplay. Big reason to buy more. When we start thinking of NVIDIA, it seems like that is the one that everyone talks about. It catches all the news, it's got all the glam, but AMD is very and often overlooked when we start looking in comparison to NVIDIA because of the data center graphics processing chips, but it is gaining a lot of traction, which is why people absolutely love it. Taking a lot of share out of personal PCs, so the personal computing, laptop, CPU market from Intel. For years, it is the leader in gaming chips, and it also has a massive opportunity in embedding chips in applications, including autonomous vehicles. We know they're still in the horizon, and then we also do have that backed by artificial intelligence and the demand for chips, which could go up in the future. Now, shares are down 53%. Guys, you are getting a 50% discount on AMD off of their 52-week high, and the stock is valued just 18 times the forward earnings. So a lot of people are also saying that, this is what was needed when it comes to the market pulling back, just for the simple fact, when we start looking at the NASDAQ, when we start looking at the S&P, even looking at, really seasoned investors like Warren Buffett, that we're starting to scale back and starting to pull out because they said the market was severely overvalued. So again, having a really pullback of 18%, which it's even a little bit less right now, could have made sense in the long term. We know in tariffs, and if we settle up these tariffs, if they go into a place, if they don't, if they come to an agreement, the stock market is going to see a big rally, and a really, really big rally in a good way when these tariffs are finally settled. Because when we start looking bigger picture at the economy, it is doing pretty well. When you look at unemployment, when you look at where inflation is landing, when you look at the job market in general, it is doing pretty well. When you think of the economy overall, just have to make sure that we keep costs low when it comes to groceries, when it comes to day-to-day things, as well as seeing the impact of what these tariffs are going to have on a bigger picture. If automotives are going up, $7,000, $10,000, $12,000 with the monthly payment coupled with interest rates, and really a driving force for this is going to be the Federal Reserve, where if the Federal Reserve decides to start lowering rates, which now they're saying to 3 to 4 rate reductions in 2025, which was backed off to only being 2 for this year. But if we start seeing rates go down, even if the prices do go up a little bit, they're going to be offset by the rate reductions that we could see from the Federal Reserve in 2025. So it is not all doom and gloom, guys. There's a lot of opportunity out there if you're willing to take the chance, if you're willing to take the risk, and really seize the opportunity with some of these companies that we mentioned in the video. All right, guys, so that's going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.